As usual, every weekend I like to drop a video. So for those that really following up with me, and uh, a big thanks to most of my followers that I see a lot of you guys drop a comment last time about the last video I dropped. Even though the video was, I think it was a little bit help, a little bit of help to most of guys, but even though we have some mistakes that come up along the recording, along the process, but I still thanks everybody for letting me know because without you guys, I don't know where how to really make amendment to my mistakes. So thank you for that, guys. So for today, we're gonna really look into to Fibonacci level. All right, how we use how we can apply Fibonacci tools uh, into our trading. And then for the beginners, some guys still they are still having issue with the forex. I mean, especially how to really identify or how to get started in the forex market. Because according to information I got, so that is the reason, most of the reason why let I like to make uh, combine everything together. So for us, the Fibonacci, and then we'll be talking about exactly what are the downtrend. If you are in a downtrend, what are the difference between downtrend and uptrend, and then a sideways market, and then also how to really take advantage of those market types, and then so without further saying, I don't want this video to be too long. So let's dive into the analysis. So I'll be using different charts for this. Let me delete this. Let me also delete this so that we can this I'm not gonna take that off because that is now as a day trader. I think I always mention in all my videos, as a day trader, especially me as one, I start analyzing the market from the daily time frame. All right. So from the daily time frame, why is it the daily time frame? Is exactly because the daily time frame give me the full information which I'm willing to know. You know, if give me the information that I know I need to know as a day trader. So you you are going to have your decision. I mean, your type of the type of the trader you are is going to determine what time frame you should be using. So first, let's talk about how to identify downtrend, the type of market that we have. So first, we have we have downtrend. There are three types of markets. Let's say that we have a downtrend, which are the first one. So and then two, we have an uptrend, right? And then three, we have a sideway market. All right. So and then next we're going to be talking about the Fibonacci retracement. Fibonacci retracement. Right. So that is going to be the last. And then before we talk about the support and resistance, that is going to be a special bonus. All right. So right now, how do you First, let me say what is really the forex, what is even the market, forex market. What do we do in the forex market? The simple, what we do in the forex market is we do buy and selling currency. So if you have ever traveled from one country, maybe your base country, to another country, you take a flight, or maybe you travel by car, but not in that same country. You leave your country, go to another country. That is, you have basically do something we call forex trading. All right. So what is the forex trading exactly? How is that possible? Because if you leave your country, go to another country, so you have to change the currency that you have at your home base country to the currency of the country you are visiting. So if you have ever done that, so you have automatically participated in the forex market. So exactly that is what we do in the forex market. We buy one currency in the return of selling the one that we have at hand. If you want to make an exchange, you have to give a currency to in exchange for another currency. So that is basically what we do in the forex market. All right, but it's just that we do it on the internet through your phone. You can do it through your phone, and then on your computer, anywhere you have, all over the world, you can do it. Even you can be flying in the plane, maybe you are in a vacation. As long as you have an internet connection, you have access to internet connection, and you have your phone, everything, so you are ready to go. So that is exactly the few information about the forex market. So now, in the forex market, we have the first thing that we're going to talk about is a downtrend. In the forex market, this is how the market moves. Market move creating a high, creating low, creating a new high, and then creating a new low. You can see how I'm drawing exactly what you are seeing on my screen. This is how the market moves. See, every time market move creating a new low, this low it's never the same like the previous low. You can see, and then the a new high it's never the same as the previous high. Always the new high always breaking the previous high. So that is what is going to, as long that you have located, you identify this high and then this new high. This high is higher than this previous high, and then this low it is not lower than this. Instead, it is higher than this previous low. So this is going to give you an hint of that you are in an uptrend. The minimum need to have three low or three high, or it can be three high and then three low. It's the same thing. As long that the low are not the same level, they are not at the same are not lower than this low is not lower than this previous low. So that is going to tell you that that is your uptrend. So the uptrend. So this is how exactly it moves. The high will keep breaking new high. All right, make a retracement, break and hold high, creating a new high. So that is what we call an uptrend, right? That goes there. Now, let's talk about a downtrend. In a scenario of a downtrend, it is also in the flip side of this uptrend. So it means that this one is looking to the upside. It's be looking to the upside, right? But in a downtrend, we'll be looking to the downtrend, be creating new low to the downtrend, to the downward. All right. So this is how it moves. A a new low, new high, new low, new high, new low, new high. This high is never be the same with this previous high. All right. So it is never break above this level. It is always lower than this high, and then this low, this new low always lower than this previous low. So this is going to be your downtrend. All right. Now, there is a name we call all this. There is a name that we call this. Now, I'm going to name them everything here right now. So this is going to be your higher high. Normally, we don't write everything, right? But for the sake for that you can understand, we call it higher high. This is what we call it exactly. All right. This high is the name we call it higher high, higher high, higher high, higher high. All right. We keep as long as we have a new high breaking this previous high, that means we keep having our new higher high, higher high, higher high until the market change the direction to a down being a downtrend. All right. So, but I'm not going to be writing everything like this because normally it's going to be I mean, like it's going to fill my screen, but I will just leave it like this. This is higher high, higher high, higher high, and then a higher high. Normally, this is how it's written. Normally, they usually write it like this. So, should be in case in future maybe you don't see this higher high, I write it fully. I write the full sentence right now, but maybe you can read in another book only showing you something like this IHH. This is what how they usually write it. All right. You know, we have H and we have H at the beginning of the two letter higher high. So that is the reason why they usually it is written in the forex market as a HH. So should be in case you see this next time, you will know you will not get confused. That's why I said that. All right. Now now you have your higher high here. The same thing, right? Remember. So that is HH, HH, HH. Same thing. All right. So have that in mind. So this is what we call higher high. And then this low, it is called. It is called lower high. Higher low, sorry. HL. All right. Which is going to be higher low. Let me put it there. Higher. Higher low. Oh, sorry. It's going to be this is going to be your higher low. So and then this should be in case you see another thing is going to be HL. Remember. So you won't see it next time and then you'll be looking at what is going on here. Why in the other video I saw the guy was he say higher low. And then this here I'm seeing a HL. What is HL? Some people you might get confused like that. So that is this they are still the same, they are still referring to the same thing. All right. So in this scenario of a downtrend, we have we have we have a lower low, we have a lower low, a lower low, and then this it may happen that you see this LAL. All right, they are still referring to the same thing. So never get confused, guys. I don't really want to make this video to be too long, but this is gonna take me time. It's gonna take a time. So the same thing, right? Are still referring to same thing. And then if you have a lower low, we have a what? We call this a lower high. We call this a lower high. This is a lower high. Anyway, this will delete this. The same thing. I delete that. We have a lower high there, right? So and then this top, this lower high, what is the name? What is the short? The short form is LH, which is lower high. Have that in mind, guys. All right. I hope this is basically clear to everybody. So if you don't know, if you have never heard about this, please you can just pause this video and then take a screenshot of it, and so that you can note it down into your journal. I mean, like your study book, study notebook. All right, so that you have another information right there. This is only for beginners. I know, because many people that already have experience about forex trading, you don't need all this information. They might be very bored, be looking very bored, and this part might be very bored to them. So now it is time to talk about the sideways market. So when you find out that the market has no direction, it is always making this: create a low, create a high, almost same high, creating a low, creating same high, creating a low, creating same high, creating same low. Never mind, it can sometimes the market can spike above the previous high. It doesn't matter. But as long that we don't have a direction like something like this, as long as we don't have that, so you should always consider these are just this or this are just a normal sideways market, just a sideways market, all right? So never get confused, guys. Let's put it here like this. All right, let's put it like that. So as long that the market doesn't break above, creating a new direction like the one that we previously drew here, so it means that we are in a sideways market. This type of market, it is not tradable. This type of market, it is not what? It's not tradable. Please always stay away from this type of market. Stay away. So this is how we usually market like this, so that anytime we see a break out of this, when the market closes above or below, that is going to create is going to tell us that the market is ready, is either to go higher or to go lower, creating lower low, lower high, lower low, like this one that we draw right here. But as long as you keep having this range band market, so you never trade this. It's not tradable. So have that in mind. So, but as a beginner, it might be a little bit difficult to identify, but as time goes on, you're gonna figure everything out by yourself. All right. So now let's talk about how to really trade all this drawing. What is this? Sometimes you might also be confused at what is really this. Never mind. Sorry, guys. So sorry, guy. Now I'm going to show a live example of this uptrend and then a downtrend. And then how do we use this to draw our trend line exactly? All right. Now If you look at my chart very well, right here, what do you think we have right here? This is an uptrend. This is an uptrend. You see exactly thing I just draw here right here. This is same thing that you are having right here, because it might touch you someday. Maybe it got to you someday, some book that talk about the market structure. Then you might feel confused, because in most of those books they usually make a drawing like this without this type of life example. All right, so that you won't get confused about the chart when you get to that, because some people, as me like somebody, me like one where when I started learning about forex that time, when I see this line drawing, I don't really understand. To be honest, I don't really understand it. But later, as time goes on, the more I practice, that is how I started to catch up with the market. All right. So for the as the first is gonna be a little bit difficult, sir. So never relent, guys. So now you can see exactly thing I drew right here. You can see market was coming from a uptrend, creating high, creating low, creating a new high, creating a new low, creating a new high. You can see that creating a new low, creating a new high right here. Can you see that? That is exactly what I drew right here. So here, how do you exactly? This is how to identify your uptrend, if you are in an uptrend or you are in a downtrend. So in a downtrend scenario, we're gonna look into somewhere where there is a downtrend. Like here right now, this is a short downtrend that we have right here. If I take the line, the path, you see market started moving from here, creating a low, and then creating a retracement, which is the higher low. All right, and then what happened? The market creating this, creating another high a little, and then the market drops, creating another retracement. Exactly, this is exactly what we are having right here. This is a downtrend. All right. So as you're watching this video right now, maybe you just learned something, then go to your chart right now and then try to figure this out by yourself. All right. Then if you get something, if you learn something new only for this view information I've shared with you, please kindly drop that in the comment section. So when you understand your downtrend, when you identify, you are able to identify a downtrend and also able to identify your uptrend, then this is where the work got starting from. How do you use this to trade the forex market? Exactly. Now, what do we do? After identifying the uptrend, now we want to start drawing our support and resistance on this level that the market has already created. All right. Now, there are two types of trend line that we have. There are, let's say there are different types of trend line we have, because we have channel trend line, and then we have normal trend line, and then we have horizontal trend line. Let me list them out for you so that you will not mistaken with those things, with those tools. Now, first one is, let's say, horizontal trend line. We have horizontal trend line, and then we have a normal, which is the second one. We have normal trend line. That's a normal trend line, and then we have the third one, which is channel, which is channel trend line. All right, we have channel trend line. So I'm going to be drawing those two. I'm going to show you these tools, these two lines, these three lines. I'm going to show you on the chart, and how to really use them. So the reason why we use these lines is because sometimes it's the one you are going to use, the one that you know that fits what you are seeing on the screen. All right, what exactly the chart that you are looking at is going to determine which one you like the best to use for that structure of the market that you are seeing, you are looking at. Look at it right now. Me, when the price of the market come to this area, what did I do? This line is called horizontal trend line. This first one that I wrote here, this is called horizontal. You can see the line, these two lines like this. The line, these two lines, that is what I mean. All right. And then this another one below here. And then if you look very well, you look to the downside, I still have another one here. This line are called horizontal line. So horizontal line are just a straight line flat. It's flattening to your screen. You double cross your screen to the left and then to the right. To the left and then to your right. Extended. The line extended itself. So if you take the line, you just drop it to anywhere you want, you're willing to drop it. Like, for example, I take it. This is this is the line here. This is the line here. Look at what I'm pointing at right now. Look at this line. Look at this. You can see what comes out on your screen. That is horizontal line. Horizontal line, horizontal line. You can see that very clear. So me, you might be saying this I'm taking is they are these all the tools? No. These tools I have right here on my screen that I'm pointing at right now are the tools which I frequently use. All right. So I have put them on my favorite so that is the reason why they are showing right here on my screen. So if you are using a mobile phone to do this, they are going to also show on your screen on your mobile phone when you enter a trading view on trading view. When you enter to trading view, if any tools that you mark as your favorite, they are going to reflect on your main chart on your screen. You are going to see it. So how do you do that? Look at where I'm pointing out to my left. If you are using a computer, if you are using a computer, you can see it to your left side. So all this information that you are seeing I'm pointing at right now, if you just put your mouse, the mouse of your computer, you just put it on top, you'll see that there is a little arrow next to that tool. You see, you click on that arrow, a little arrow, then you see everything will open. You can see that. See this one I have, they are having yellow star. Those are the one I have put in into my as my favorite. All right. So when you are using your computer to do this is how you're gonna do that also. So you see that anyone that I want to put as my favorite, if I just point at it, if I just point at it, you see that there is a star in front. So if I just click on that star, it's going to show up like this yellow. Simple as that. And if you are using a mobile phone, if you are using a mobile phone, same thing happen. You see below under your screen, mobile phone to do this to apply to look for your tools on the on the trading view. You are going to see something below your screen, or you have I think below your screen, below your screen there is a chart, there is a watch list, and then we have charts. We have a lot of things that will be listed under your screen on your mobile phone. All right, and so that there is one that is going to show something like a pen. It's going to show something like a pen. That is where your tools are light. All right. If you just click, if you right click on that on the pen, that pen is going to take you, open you another interface, which is going to show on your screen, pop up on your screen. You are going to see the list of every tools that you need. So among those tools, there's a thousands of tools on this page. So I cannot mention everything. You as a trader, you just have to walk everything through. Go through everything and try to locate the one that you are really looking for. All right. So when you open it, then you can right click. Maybe you press it, you hold it and press it down. Press it, hold it, press it steady. So as I was saying that right now, then when you if you just put your finger on the tools, any tool that you want that you decide to maybe to put as your favorite, you right click on it, put put it, press it down, hold it steady, and then you are going to see. Anyway, I don't have to complicate this because as you open the tool section, the section is going to give you an information which you need to is going to just read your screen, anything that you seen on your screen, everything there as instruction, right? If you want to do this, if you want to do this, then you can press this, you can press this. Those are going to give you that instruction because it has been created like that so that for those that are still new to this, they can all understand it quickly, very easy. So now, after you do that, now you mark all the you put in all the tools that you like to use. You put everything out to your favorite. Right? After you do that, now this one for those guys that are asking that I should name the tools that I use, the tools I should name everything that I use. Well, it is a little bit difficult to name everything because I can only mention those that I use, those tools that I use frequently. That is only the thing I can. That's only the best I can do because if I have to list everything, it is going to take almost all our time, right? So now what I'm going to do is I'm going to the one that I have right here. I'm going to name them for you so that you can also use it as maybe if you like, that is if you want them, you can also add it to your chart. All right. Now, these are it. Uh, let me write it separately. So these are only for those that look at this rectangle. We have two types of rectangles. We have trend rectangle that it is moved. You can move, draw it along. You can see the way this rectangle, I can move it anywhere I want. I can move it, change the direction, move it anywhere I want. This is a rectangle. Rectangle, all right, is a rectangle. And I can still use it. Look at it. If I take the same rectangle, I can use it here like this. I can use it to highlight this sideways market, just like that. I can use it like that. Then look at where I'm pointing at. I can reduce the color by clicking it and then reduce the color or change the color to any color that I wish. You can see I can do that to this rectangle. Any tools that you choose, that you select, you can change the color, you can customize it to your taste. It doesn't matter that you should keep using the same color. All right, you can customize it to your taste. Now, this is the second rectangle. This second rectangle, this can only draw, extend it to the right or to the left. That is all you can do. You cannot move like, see this one, you see this one, I can move it to anywhere on my screen. I can make a direction, I can direct it to anywhere that I wish to. So, which means if the market, if you having as we are in an up in the downtrend here, I can draw the line. I can only draw the line just to make it like to show like this is a downtrend. I can draw the line like that. You can see. Can you see that now? I can draw that like that. I can make it like that, and then if I don't want it, I delete it. And but this is only, it can only go straight, double cross your screen. This is all you can do. Extend it, reduce it, change the color, or increase the color, change the color to any color any color of your choice. You can see I change to green. So that is gone for that is for the rectangles. Let me put everything down here. Rectangle, we have two rectangles. There are two rectangles. Let me put that there. Two different two different rectangle. All right. So that is one. This is really gonna take our time. Uh, I would really recommend that maybe most of now. Let's say this one. This is, for example, this is called a long position. If I decide to take a buy from this level, this I'm going to put this like this, and then I will extend my target. The target I'm expecting to take my profit, and then the stop loss, that is the red color side. All right. If I'm expecting to take a trade right now, maybe after I've done my analysis and I decided to take a trade from this level at the price of the market, from the level where you are willing to enter the market, then I can put these tools. These tools, it is a long, it's called a long position. That means you want to go long. You want to go long on the market. That means you are buying, you want to buy. So that is what it means, the slang in the forex market, because we have different type of slang that we use in the forex market. I mean, when it comes to forex markets, all right. So when you hear I'm going long on so 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 pair. So that is basically means you are buying on that pair. And then if they said I'm going short, I'm shorting USD, Euro US dollar. That means I'm selling Euro US dollar. All right. So those are the slang that we use in the forex market. So have that in mind. So this is the tools to buy, and then this is the tools to sell. You can see they are facing different direction. The color, you need to focus on it. So the red side, you can have different color. I can make it the same color, but I am the one who know what I'm doing exactly. But as the more you practice this, the more you study more the charts, the more you this is going to help you a lot. All right, you are going to master everything. So the long position, which is going to long and short tools. Let me put it right there. Long, sorry, long and short, short tools. That is called long and short tools. Now the third one is the path. It is called path. This one that I used to mark this zigzag line. This one I used to mark this zigzag line. It is called path tool. You can see showing up, popping up on my screen. So it means that if I'm willing to make an indication of how the market move, I can make like this. You can see this is called a path tools. Path, it's a path. All right, path. I'm putting it down there. It's called path. Simple. That's it. And then the next one is our trend line. This is a trend line. So what do we use this trend line for? The trend line, it is only to mark if the market is in a downtrend. I can mark it to touch. Mind you, when you want to draw your line, I'm going to show that later. All right, make sure it's touching the peak and through. Make it, and then you extend it to the future. You extend it to future. All right, look at the way I draw this draw line. You have to touch this top, touches this top, touches this top. The more touches, the better. And then the less touches, the worst. So have that in mind. So if you want to draw your trend line, this is it's a sloping line. This line you can draw it to anywhere. You can draw it also straight. You can draw it straight like this. You can also draw it vertically, but this vertically does not really work. That we don't draw line vertically. We always draw is either to slope lower to the downtrend or make it straight to identify something. All right, that is all what we can do, or we draw it to the uptrend, the direction of the market, what side the market is facing. That is what you're going to how to use this line. All right, so you can see how I'm drawing this, making sure it's touching both this top of the market, the way the market move, go lower, go coming back here, go lower, coming back up there, go lower, coming back up there. All right, you have to make sure the more touches, the better for that trend line. All right, later in my next video, I'm going to explain in details what this really means. All right, guys. Now, Now, the next tools, it is this arrow. It is arrow. This arrow is not does not really too necessary, but I'm going to put it down to the list. All right, guys. So this arrow is only sometimes maybe you are willing to point at something. We use it to point at something like for example, I also I can still use it to show the direction of the market like this to show it the direction of. You can see it is an arrow. We have an arrow point at the edge, so that is why they call it. It is called arrow. All right. So this does not really too necessary as a to be on the favorite tools. And then this is called circle. This is called circle. That is fifth, right? Fifth, it is called circle. Circle. Circle tool. Circle. It's called circle. That circle it is for me like maybe as I'm analyzing this market right now, I want to point out this zone. I want to point out something so that I will point it out like this. I will point out the where the market has rejected from, how many times the market has touched that area. So this is what we use this for. All right. I can come to my chart, also do the same thing like this. You can see how this is where the market touches, and then it touches here, it reverse, and then here it's reverse. All right. This is what we use it for. So I hope that is clear. Now the next one is in my list is horizontal line. Remember I talked about it before. I spoke about it before. So uh, which is six, that is six horizontal line. Horizontal horizontal line. Horizontal line, which is the one that I have right here. I have this one I have right here. So if I take it here, if I take it, I want to put it here. You see, you can see it, right? This is the one I just put right here. If I take another one, I put it here. You can see there are now two right there. Why did I only use the two because just for me to have something a little bit reflective, effective on my chart. So it can be easier for me to focus on it. That is all. You can use one if you like, but me, I use two like that on the same area. But I don't make it to be too wide, that to be too far to themselves. You can see how close they are. So that's what I use it for. And then now the next in my list is horizontal ray. Horizontal, horizontal ray, seventh horizontal ray. Horizontal ray. This is horizontal ray. You can see horizontal ray. What do we use that for? It's like look at this. What I mark here. You can see this red line. This red line it is called horizontal ray. Let me delete this off. Let me keep this off. So you can see this line that I mark. This red line. This is the one that we call horizontal ray. Horizontal ray. What does it? What is the use? The use is simply the same. It works. It acts as a trend line. The same thing as a trend line. Same as trend line, but the problem is that it is an half line. You see this one, this trend line, you see that this though is it crosses all over my screen. It extended to the left and also extended to the right side. So but this one, it can only extend right from where you put it and always extended to the right by itself automatically. When you plug it to your chart, depending which area you want to start from, you want it to start from. If I want to start from here, let's say let me go and take a new one. I leave that there. And then I take a new one. Maybe I want it to start from here. I want it to start from here and then to the future. And then I put it right there. You can see right now, this is the line. It's starting from here and then to the future. So if I decide to leave this line here like this, That is how it's gonna be until the further notice, until when I remove it by myself. All right. So this is the what we use horizontal. So what may I use personally? I use this horizontal rays to identify the opening price of the day, the where exactly the market open for that day. That is when what I use it for. You can see I put a rating, a note there that open price. So that is what exactly I use this, mostly use this horizontal ray to do. All right, that's what I use it for. So now the next in my list is gonna be Fibonacci level. This is Fibonacci level. Where is it? Where are the list? Ah, okay, here it is. Which is 8 and then Fibonacci. Fibonacci retracement or Fibonacci level. Retracement. Normally it's a retracement. Fibonacci retracement. So now this is the where the disc about the Fibonacci level comes from. The Fibonacci level, it is a long story. I cannot tell the story, but I think if you want, if you are in my group, so I usually share a PDF about most of those all this forex information. All right, so kindly join my group on the my you on my YouTube description, in the description section, so you can enter there and then you see the link to join my group right there. So there I can share any information that you are willing to know about the forex market. I can share also this Fibonacci story and the storyline and the out what is really the use and then how does it work, how does it really act on our chart. So we are going to be talking about that. And also in my next video, I'm also going to talk about it more in details. So now you can see how I draw this. You can see how it looks on my chart. These are just the number of the Fibonacci I selected to be using. So as a newcomer in the to the on the trading view, if you plug this Fibonacci level, it's going to give you a lot of colorful line. A different level is going to give it to you. All right, and you can see mine is just a little line that is showing right here, because these are the line, these are the levels which I use personally use. I have edited it. So you as a new one, as a new person, if your first time of taking this Fibonacci level is going to give you a lot of line. Let me go, let me go to this under the setting. You can see all this line, or look at all these level, these numbers, all this number, they will all show on your chart. They will all show on your chart if you don't really know it very well. So you have to set it using this same setting that I use. Well, this is my own setting that I use according to my study, according to what I learned. All right. So it is depend on you. How do you study yours? But I'm going to briefly explain the Fibonacci level. So they are the golden line, they are the golden limit, they are the golden number which we usually focus on when we want to use the Fibonacci to identify the market direction or reversal. So these are the golden line, the golden area which I use as a day trader. So that is why I only have this five. You can see one, two, three, four, five, six, sorry, six. I have them activated. So the rest of all this number, I've already deactivated them. So if I, as you, your first time of taking it, of using this, you are going to see a lot of line. Let me put it so you can see. If I put on this, I put on this, you are going to see a lot of line. You're going to see a lot of line on your chart. So you will get confused if you don't. Let me just leave it like that, and then sometimes you will have this background increasing also. This background is going to be increased. You're going to see a lot of color on your chart. Now you can see this. This is how you're going to look on your chart. You can see, you can see this line. So this is how exactly it's going to look like on your screen as a first time. All right, so you are the one to go under the settings and then toggle on many of these lines. You are going to toggle off these levels. So if you don't do that, you are going to get yourself confused. All right, Let me remove it again back so that it will not mess in my chart. So these are the one I use, and then the background, I remove the background, reducing the color so that you can see now. I remove the color totally. That is how I use my own. So you can see now. So it is limit, because according to my study, this is what I use my Fibonacci, how I use my Fibonacci, and then what I study. This is what I can use according to my own, according to my story, according to as a day trader. All right. So I'm deleting this so that we can have enough space on my chart. So the next tool I'll be talking about is the channel. Trend-based Fibonacci extension. We have trend-based Fibonacci extension. What does that mean? So look at now. This is how we mark trend-based Fibonacci. I can mark this and then mark 3 zone. All right, you can see. Also, this one also, it is the same thing with the previous one, but this one is that I can mark 3 zone if I want to mark, identify how the market move from here, come here before going up. All right, but why the other one, it is only from this bottom to this top that we can use it. Let me use so that you can see it. Now if I want to mark, I will mark it like this, and then you can see. But this one is different. This one I can draw it from this, also from some A to B and then to C. This one I can only draw it from some A to B. Simple. So that is the difference. So what do we really use this Fibonacci for? Let me delete this because I don't mostly use that Fibonacci, that trend base. This one I will use it for, like now, after you identify your uptrend or your downtrend. All right, we usually use it to mark out where, to identify where the market is probably to reject or to stop the retracement. As I said before, when market is creating higher high, higher low, higher high, higher low, when market creates this higher high, then now we want to wait for a higher low to be created. So this higher low, this is where we want to identify on the Fibonacci level, because according to the rules of the Fibonacci have to retrace is either 0.61, 0.618 level. You can see it on my chart, 0.618 level, or 50% level, or 0.382 level before the market do what? Go back to the upside. So it is around between this area, these three area, the market usually reach to make a retracement before going back to the upside, as long that the uptrend is still active. But once the uptrend is no more uptrend, that means the market is probably to continue lower or violating this level of the Fibonacci. When you see the market has violated this level, closing below this previous low, that means the market is no more in an uptrend. The market is in a downtrend. You want to change from an uptrend to a downtrend. All right. So this is how we use Fibonacci. So if let's say for example, then if the market come back to this, if the market come back, make a retracement to this level, I want to see the way the candles are behaving from this area. For example, let's go to the live chart so that I can show you. Look at it now. We are in an uptrend, as I said before. All right. Now, if I am willing to buy, take a buy. I want to take a Fibonacci level. I will draw it from this bottom. If the market is in an uptrend, you want to start from the bottom, right? From the previous low to a recent high. Recent low to a recent high. Sorry. So you can see I draw it from this level. This is the recent low and then recent high. I want to draw it. I want to make sure it's touching the top. All right. Now this price of the market is exactly at the 50% Fibonacci level. What I want to wait for when the market starts, when the market will reopen, I want to see what is going to happen at this zone. You can see This level are the golden zone of the Fibonacci level. So if I am willing to take a buy, I need to see what is these candles are telling me here. If the market is unable to go lower from this level, that means I will be going what? I will be going long from this, rather from here or here. After seeing, you can see this bullish candle is telling me something. So because immediately the market cross into this 50%, then there is a reaction. That reaction, that is what we call a confirmation of that the market want to go back to the upside. Then I will put my long tools as I mentioned before. Then I will make a buy. I can buy from this level. So these tools we use it to identify where is probably the market to make it when the market want to retrace, where is likely to stop that retracement before continuing to the main direction of the market. That is exactly what we use this Fibonacci for. All right. I hope that is clear. And if you still don't understand, I'm going. That means I'm going to make a short video explaining this briefly, only about Fibonacci level. So if you want me to drop that only video explain this Fibonacci level, then drop your comment so that I can make a special video on that. All right. So this trend base, the same thing apply to that. All right, the same thing. This trend based Fibonacci and then the Fibonacci retracement, they are all the same thing. And then now we have on my list another information line. This information line is just almost the same thing to a normal trend line. That is going to be the ninth Fibonacci, and then 9 is going to be information line that is called info line. The information line is just if I should put it here, it's a normal trend line that you see on your screen. But normally, I have deactivated info and something here. You can see there's something pop up right now. You can see hard text. So that is the information line. There is a something in that line before, but I deactivated it because I don't want that. I only need the line. So this is the line. Also, I can use it as my normal trend line. I usually use it as my normal trend line. All right, I have the green and I have the red. So if I click on it, I will click. If I see where, hold on, here you can see support. And if I put it on my resistance, okay. All right. So if I put it on the, I can put it on the as a support. I can put it as my resistance. If I put it on as a resistance, you see, because I've already customized it to show this red. And if it is a green, if it is a support, that means I will change it to green color. I just customize it, just a normal trend line. I use it as my normal trend line. All right, but it is more of a normal trend line. But for those that still use this, they know what they use it for different things. Or I cannot explain that in this video because so that to make this thing short, to make the story short. All right. So now the next is we have my on my list is uh, we have the this price range. Sorry, price range. Price range. Sorry, I didn't put it now. That's number 10. The 10, the price range. What do we use it for? Let's say if the market, if I'm willing to calculate the pips of the market, the pips. Maybe I want to calculate from here. I want to calculate from this level. What is this? From this level to this top. Then this is going to tell me the pips, how many pips I have right there. You can see this is what is going to tell me how many pips I have from this level to this level. So that is just to measure how many distance do I have this my support and then my resistance. Simple as that. All right. So let me get rid of that, and then we still have ruler, which I don't have it on my favor as my favorite, but ruler is here. The ruler also does the same work. I can use it to measure the market price from one level to another level, how many pips I have from that level. All right. So that is That is for that. Now we go for the next one. So these are the call outs which I will call out. The call out, what is it mean? Let me put it down first so that you can have it in your list. We call it call out. Call out. It is very simple. You can hear the name. Just listen to the name by yourself. What is call out? Call out is just simply mean like maybe I'm willing to take a buy or take a sell from one level. That means I want to put a note to that level so that anytime I open my chart, I will remember. That will remind me that I was willing to take a buy from this level or take a sell from this level. That is just simply what it means. So we use it to identify a zone that look at here. It might not be to buy or sell, it might be for other information, other purpose, other you see the way I'm writing this, I can also do the same thing, writing something just like that, and then pull out, just write everything like that. You can see. So it's just simply that is what I use it. Me personally, that is what I use it for. So it is a question of yours to decide what do you want to use that tools for. But this tools does not really too necessary. Does not really too necessary. All right. So the most important part are these like this rectangle, by the long and short tools, the path, and then the trend line, horizontal ray, Fibonacci level. Those are the ones that are really mostly important. And then the next one on my list is going to be the number 12, which is going to be the channel. Yeah, Fibonacci channel. Fib Fibonacci. Fibonacci what channel? Fibonacci channel. Look at it. Sorry. Fibonacci channel. It is a tools like sorry guys. It is a tools to have this chart. Like if I identify the market is only creating higher high, higher low, higher high, higher low. Look at it right. Then this also just like a Fibonacci is a Fibonacci for me to have the support. I have a support here. I have a resistance right here, and I have a middle retracement, which is probably the market to take a retracement from. All right. So you can see what I have here. I have three line crossing this, which we have the price of the market in between that range. I can extend this to the future. That's okay. And as long that I keep having the market is inside that range, that means I will keep having the uptrend. All right. So anytime the market touch this low line, which is a zero Fibonacci level, I want to take my buy, and then somehow I can secure my profits from the 50%, which is the middle line. But normally it is a 0.68 retracement Fibonacci level. All right. So you can take my profit here or take my partial profit, and then as the market break above it, then I will take the next profit at this resistance level until the next in the future if the market manage to break out of this line after how above this resistance or below this support level. So this is just a channel that a channel you know what they talk about when they say something channel, that means it connected low and high together. All right, multiple lows and then multiple highs. That is why it's called channel. But it is a Fibonacci channel, Fibonacci, because a certain level that you see on the Fibonacci retracement, they are all important. It is very, very important. They has their own role, the roles that they place out in the market, the forex market. So you have to study more about the Fibonacci level. As I said before, I'm gonna make a video talking about that in the future. So now the next one that we have on the list right now that we're gonna be talking about is another channel. It is only two line. This channel also is just the same as the first one that we talk about, right? So but this one is only two line. You can see. parallel. It is called parallel Fibonacci level. And further, bueno, sorry, sorry guys, channel, parallel channel. You can see it right here on my chart, which I have right here, parallel channel. I have it here. This one also the same thing as the first one that I mentioned. It is only to for you to make a connect a low and high together. For example, if I draw it from here, I draw it here. See, I've connected two lows, the same thing you can see. So I can draw this, I can draw that. So this level is going to tell me anytime the market, you see, I have my support this level, I have my support this level, I have the middle line, which is the 50%. I have the top side, which is my standing, representing my resistance zone. Touches here, you can see touch, and then here it broke out, but it couldn't continue to the high to touch this line. Instead, it's rejected back into this support zone, support area. So if it continue lower, then I want to wait to see if it's gonna break below here or it's gonna be respected like this previous one. If it's respected here or it continue lower, it continue higher as it continue right now, as we have it right now. If it continue higher and then break above this middle line, continue. That is when we're gonna be focusing at this next line. All right, that is another bus stop for the market. So that is how we just use this to predict the future movement in the forex market. Let me delete that. And then now the next one is we have what we call box, gam box. Sorry. We have a gam box. Gam box, it is a, let me put it 14. It is a gam box. The gam box is just a tools that we use to identify our supply and demand, which is a discount and then a premium level in the market. Because if you want to buy a market, if you for example, if you go to a market to buy something, you always want to buy at the lowest price, right? And if you want to sell back, you want to make sure to sell back at a higher price. So that is the wish of everybody, all the businesses, all right? You want to buy at a higher price, at a lowest price to sell back at a higher price. And then if you want to sell, you want to stand at the level of the highest price. That is what we call a, a premium level in the market, and then we have a discount level. So this gam box, it is basically to identify where is probably to be located a premium and then a discount zone. For example, how do you draw it? Now, look at from this bottom, this previous recent low and then this recent high. If I am willing to sell or to buy, I want to take this gam box for me. If I don't understand, okay, where can there be any, where is a premium level from this level now? Where is a premium or a discount zone? Okay, if I don't know it, then I'm going to take this gam box. I can draw it from this level, from this recent low and then to the recent high like this. Exactly. Now the price is on the premium side. So it means that from this level, if I am willing to buy, if I am willing to buy or sell, if I want to sell, this is the area I can sell back to this area, or I'm going to wait to see if this price is going to return back to this level. So that from this level, I want to see what is going to happen here for me to sell back, or if the price continue trading higher. So this, you can see I only have two level. I have one green and then I have another one red. If I am willing to buy, I want to make sure to buy at this zone and then I will sell at this zone. And if I'm willing to sell, I will sell from here and then I'll buy from here. That is simply what we use the gam box to identify. We use it to identify premium and discount zone. Simple as that, without complicating matter. All right, guys. So the more you study, if you still don't understand this video, sorry for making this video too long. So I was not expecting this gonna be too long, like, but for the request of many guys are requesting for me to make this thing to break it down. That is why I have to do this. All right. So if you can watch the video from beginning to the end, then anything that you don't understand, please kindly drop your comment so that I will make amendment on how to repeat that section, so that, or you can drop your comments in my Telegram channel or my group. Also, it is for everybody and not pay a bit. Mind you, it is free of charge to join. There, you can have interaction. You can chat with me directly, uh, and then I will answer your questions. Also, if you join my WhatsApp group, also same thing. You can chat me up personally. Then I'm going to reply your question. All right, guys. So now for the last one on my list, I have the triangle. This triangle, I love it so much, and I'm going to tell you why. I love it so much because why? That this really helped me because I'm a gold trader, and this really helped me so much most of the time. And again, that now that we have gold trading very high, creating a new high every day. So before gold create a new high, gold usually creating something that we call a triangle pattern. All right. If you know about the pattern that we have in the forex market, then this is gonna be the one of them. All right. So triangle, which is going to be the last but not the least. All right. Triangle pattern. Look at it right here, which I have, and put it back to the place. And then triangle, it is this. It's like this. I use it to mark out like this. Sorry, now you can see. I can use it to identify the market. If I see a pattern that the market is creating and is looking strange to me, let's say as the market is creating higher high, higher low, higher high, higher low, higher low, and then it's keep creating something like this, keep creating something like this, creating something like this, keep creating something like this. Sorry for my mind. Don't please. Sorry for my drawing. Sorry for my drawing. I don't. So this is going to be the the triangle that the market usually create. Eh, don't mind. Don't mind my drawing. Sorry, guys. So, but something like this is what usually happen. The market will create. Is going to create like that, and then you will start seeing, as you seen this, then your mind will be telling you this market is not like a all the one that we have you see the way it's be creating. I'm going to show you right on the chart right now in the live, so that you can notice it. And then so that is why I love this triangle. So when I notice something is happening like this, I will take this my tools, I will use it to mark it out to see if my analysis is correct, if what I'm saying is correct. All right. So this is what I basically use all this line, all this information, all these tools to do in the market. The more the market creating this accumulation in this range, this will tell me, because this is a continuation pattern. It is a continuation, which means after this accumulation, then we want to see something like this. Market is going to break out, retest, and then continuation. That's what we call a continuation pattern. A continuation pattern. I think in my previous video, I mentioned something like this. So it's a continuation pattern, and also later we have another a reversal. But I will going to talk about all these patterns in my and I'm going to make another video talking about all these patterns. So if you're willing to, please kindly subscribe to this my channel, so that I'll be dropping more information about all the information that you need about the forex market. All right, guys. So I think this is where we're gonna stop for today. As you can see, this let me show you for before we finish. Before we round up the video for today, let me go on the growth chart. you're gonna see what I mean, what I was saying. Let me go to the lower time frame because I have it on the that is I was on the daily time frame before. Look at it right here. This is what I was saying. This is what I was saying. This is the triangle. All right, this is the triangle which I just mark out on the chart right now. You see, before I was having the triangle right here like this, and then I have it there like this. This is how I have it. Oh, sorry. This is how I have this before, and then before I lastly draw this, I remove it and then put in this, and then what on Friday, this last Friday, at time of making this video, this is Saturday already, and then as this price broke out of this resistance level, so what I do, as I mentioned before, is a continuation pattern. So I had to take a buy and then target the previous high of this level. You can see, take profit. Now we have a retracement. Market is gonna make a retracement back to this level. As I was saying here, that we're gonna have a retracement. Where is it? Where is it? Where is it? Where is it? It was on a daily time frame, so it's too far. So you can see this is it. You can see what I'm saying here. This is it. Then after breaking out of the zone, out of the triangle, then we're gonna have a retracement, which is what is happening right now in the on gold chart, which is what is happening right now. You can see that break out, and then we're having this retest. So next week when the market is gonna open, I want to take another buy from this level again. But before I take the buy, I need to identify, I need to make a confirmation. I want to wait for that confirmation telling me that the market don't want to continue lower before I can take the buy, because I don't want to risk anyhow. So you have to always identify, always have to know what are the reason you are buying or you are selling the market before doing anything. All right, guys. So, and then what I was gonna use before to say before, and if I'm gonna combine it with the Fibonacci, for example, I'm gonna take it from this level, and then I will draw it. You can see now I have the market is at the price of 0.618 now Fibonacci level. So basically, it means that it's possible for the price to come back from this level to this level and then leave a rejection before continuing going to the upside. All right. So, but before doing this, I need to know all the basic information which I need to know on the like dollar index. I need to understand what the dollar index is trading is weak or is strong, and then also check my economic calendar. If there's nothing like economy fundamental analysis which is probably to affect the primary analysis. So before I take any buy and sell in the market. So guys, thank you for watching from beginning to the end of this episode. Please, if you are new, please kindly give a thumbs up, subscribe to my channel, please share this video, give a thumbs up, comment any concern that you may have. Please kindly drop your comment to the comment section so that I can make amendment to anything. All right. So and I wish to see you in my next video again. So peace out, guys. Peace out.